But let me welcome on board Vikas Khemani and ask him about what he's recommending investors should be doing in this market. Vikas, hi, good morning. Good to be chatting with you. Vikas, I can't help but talk about IT first. The most hated sector for almost 2 years now. Is the derating finally done with? And albeit tactically, are these stocks a buy now? Given that you always keep getting a news flow or the other, like HCL Technologies this morning with that partnership of over 1 billion that they've struck with a European company.
Hi, Aisha. Always good to chat with you. So clearly, IT has been in transition. There's no denial that AI has been a disruptive technology, but we have long maintained that while this transformation will happen, but IT services companies will tend to gain in that as an industry. Of course, companies will have to reorient themselves. AI, in fact, will every time there's a big technology transition happens, post Y2K, whether it was enterprise digitization, cloud migration, it has only expanded the size of the industry. So I think this whole narrative of AI will kill the IT industry itself was, in our opinion, wrong, and we've been speaking a lot about it. In fact, last month's our letter to investors talk about a lot that how the AI trade is a frenzy in US and it's in late cycle, and incrementally people are questioning ROI on the AI spend, as well as there are trust issues are appearing about. So I think that will slow down the pace of adoption. And more importantly, I think all IT companies are using AI as a tool to kind of deliver their services, which will bring down their costs. In an enterprise context, I know IT services will always be relevant according to us, and these valuations will sort of current valuations, current correction only is an opportunity. It might happen that sector might remain under flux for some more time. That one does not know. But if you look at 2, 3, 4 years out, I'm quite sure that reasonably good value creation will happen there. Of course, you'll have to work on the names, which companies are better adapting to that. All those things are relevant also.
Sure. But Vikas, would you have an AI linkage to any of the technology names that you would recommend right now? And more importantly, is this time to go aggressive into IT services now?
Like I said, one has to know which companies will benefit from this transition. That does not mean that all the companies will benefit from this transition. Some will be fast to adapt, some will be slower to adapt. Ones which are adapting fast would be very, very, a big beneficiary of this. And the real thing is like identifying those companies, and especially in the mid and small cap space.
What's your view on Adani Enterprises? The QIP has been upsized to 15,000, getting a demand of nearly 38,000 crores there, and almost all mutual funds and new investors from the foreign investors participating in that. More than that, in the last 2.5 years, they have raised around 45,000 crores in equity alone.
That's a good news. I mean, it's a good company. We haven't participated.
And do you have any view on Adani as a whole?
We generally don't comment on the stock specific names.
Okay.
Okay. Vikas, curious to know about how you're looking at some of the financials. The numbers have started to trickle through. Credit growth looks mixed, if I can say that. I mean, strong overall, but mixed otherwise. I mean, there are certain pockets where credit growth is strong, certain which haven't performed as per expectations. But deposits, does that concern you at all?
Of course, slower growth of deposit, is a point of concern for the entire banking system. And, I'm sure, something needs to be done on that. Credit growth, I think, in my opinion, has been in a decent range for quite some time. And we don't see much challenge. Of course, there will always be pockets to go slow, go fast. But in general, I think the direction is good, positive. With the interest rates coming down, I think it will be all positive for financials in some sense. So we've been positive on the entire financial pack.
Because you've always maintained that earnings growth is going to be the important driver for Indian equities over 5 years. Now on the cusp of this earnings season, wanted to understand what's your prima facie expectation on where the positive surprises and where perhaps the dark horses will emerge from?
The story pretty much remains same. I think at index level this year, I see no reason why India earning growth will not be between 14 to 16%. Of course, some Q1 earnings might be disrupted because of the West Asia war, not a lot. I don't see a major disruption at India country level, but some sectors, some companies might have faced some heat due to logistics and the cost. But in general, I think once now it seems to be settling down, and things are coming back to normal. So in general, I feel earning growth will be robust. Generally, we have seen GDP growth is good, GST collections are good, direct tax collections are good. So I don't see any major sign of worry in the economy. Oil prices have come down, currency is settling in. So generally, there are more positive than negative at this point in time. And as the earning kind of comes out, market will start keep factoring that in. Is where we are seeing.
Vikas, I wonder if you have a view with regard to oil and gas names, upstream or downstream, just given the kind of moves in crude. Now we are seeing, or rather we are penciling in a much stable crude level at around 70 on the barrel. How should one place their bets, or how are you looking at the current environment and opportunities?
We haven't really done any much investment in that segment because that's largely government interfered segment. So one does not know much. One can't play much on that. Of course, with oil price coming down, some of the upstream players might look not so good. But generally, we avoid those players. So we haven't really invested and don't have a strong view on that either.
Because how do you look at the EV theme as a whole? Will you play through the OEMs, the auto ancillaries, or the charging infra players?
I think one thing is becoming very clear that the EV adoption is accelerating both in PVs as well as the two-wheelers. That I think is here to stay, and in my opinion, that theme will accelerate from here. Definitely, there are many players in that space, and there will be a few winners. Generally, we've been more positive playing through auto anchs rather than the OEMs, because there's no pure OEM player in either space. There's only one in two-wheeler space, but that's quite expensive according to us. So it's so far we have found our comfort in playing through through the auto ancillaries and some of the other names which we own, likes of Tata Motors and all, which have reasonably good EV market share in the passenger vehicles.
And, we spoke a little while ago about how liquidity could be a challenge given deposit growth. Would you therefore prefer the NBFCs over the banks, Vikas, or is it a pure play, valuation play that you prefer NBFCs over banks? How should one look at it, even within banks, private versus PSU?
I didn't say liquidity could be a challenge. I said deposit growth could be is an issue, and that's not necessarily linked to the liquidity. That could be the depositors finding better alternatives. And in that sense, cost of deposit might go up for the banks. But generally speaking, I think the RBI is working on having a benign liquidity scenario, and this whole FCNR inflow can also have a good impact. So according to me, banking system, so deposit is not really linked to that. So, and you have both plays. We own in our portfolio NBFCs as well as banks. So I don't see any reason for that one to choose one versus other. Yeah.
Vikas, what is it you're observing on the entire staples pack? I mean, just taking a leaf off from, say, Marico's quarterly numbers, it seems that the big beneficiary of the West Asia war ending and its impact on some of the, supply chain and commodity prices is actually being felt by staples.
See, all these companies, of course, they felt, and some of them have taken the price high. But as the commodity prices and supply chain issues settles down, these companies don't cut back the prices, right? Generally speaking. So after a spike in the cost and thereby increase in the prices, generally these companies tend to have margin expansion. And I see that kind of period coming for at least the next couple of quarters. Of course, eventually competitive intensity settles and issue settles down. But at least in short term, they should have a margin expansion.
Because give us a sense of some of the retailers. V2 means I know you don't talk about specific companies, but value retailers. How do you look at them? The numbers have been good. The updates have shown between 17 to 20% jump in top line for many of them.
So value retailing has been doing very well, especially from some of the well-managed companies, whether it is Trent or V2 or many more. Segment has been doing well because some of these companies have delivered good value to the customers, and that always finds value at a reasonable price. Always find good interest. Only question for us has been around valuations, and that's where we avoided the segment. But in general, I can say the segment has been doing well.
Is there any contra bet in the market right now?
IT could be one contra bet according to me. From here, I think there's lots. There are values. There is a disinterest by and large industry under ownership is there. So that I think definitely can be looked at the contra play.
Okay. And how do you look at some of the power plays, Vikas? You're playing it through BHEL right now. I don't want to talk names, but give us a sense of how you're looking at power at this point of time, just given the run-up in valuations.
There's a massive investment happening in power as a segment. We all know that, in context of India as well as the global context, AI is a very big, power guzzler. And, in India, we have double, this thing because we are also growing as an economy. Manufacturing is growing. So all those things are, sort of increasing the demand for power. So, India needs to invest a lot in generation, distribution across the value chain. And as a result of that, we think that this sector is here to stay, both in the conventional as well as the renewable space. We have found our more comfort around the conventional space where we have done very well in terms of, some of the names you said and some other names which are ancillary to the main plays. So I think generally speaking, this segment is likely to remain quite robust, both because of the domestic investment cycle as well as the global investment cycle.
Okay, Vikas, great to chat with you. Thank you so much for your time today.
Thank you very much. Lovely chatting with you all.